I don't think a study was done to understand how it impacted even my industry. My analysts, they have to go through hoops just to get information or use a Bloomberg terminal. Why would I have to use a Bloomberg terminal just to get price data? I mean, it's
Yeah,
ridiculous.
yeah.
That should be accessible to all investors, even people who are just studying, people who are students, people who want to do case studies, people who just want to learn. Why
Mm-hmm.
can't they get that access to information? Jamaica is already a data poor country. Why would you take away price data? I have a
Yeah.
serious issue with that.
Mm.
So I mean, we have a lot of work to do. Um, I have a lot of work to do. You know,
Yeah.
just thinking about it give me a headache. It's ridiculous.
Yeah, there's really no reason for it. So I
Yeah,
don't know. I
yeah.
don't know.
But I'm happy being Doctor Doom.
Fair. I mean, that's how you make other people get better, right? Somebody has to
Yeah,
talk
yeah, yeah,
about
yeah,
about
yeah.
some of
Again,
these
I'm pro
things.
JC. I told you I did their courses before, and I've given away their handbooks. I've gotten their handbooks and given them away, especially when I
Hmm.
did wealth. Oh my God, I forgot to mention. I am the founder of a platform called Wealth Watch JA. I started Wealth Watch as a blog originally in about 2014, 2015, where I
Wow.
was just simplifying economic concepts,
Hmm.
right? They affect everybody, but they don't know what it means. So whenever we used to talk about inflation so much, and we used to talk about the definitions, and then it morphed into discussions about investing and what investing would be like.
Yeah.
So a lot of them were written. A lot of the content was written articles at first, and then it morphed into videos. So Wealth Watch JA is still on Instagram and Twitter. It's still happening. It's just that because of work and everything that has been happening, I haven't been able to dive back into Wealth Watch the way I want to. But one day I will. I will. But yeah, that's one of my biggest segues into investing. So even before I was at JMB, I would have been doing Wealth Watch for years. Yeah, separate and apart from like my credentials and stuff.
Nice, nice, nice.
Yeah.
Okay.
Blogger, producer,
I
Mm.
told you my life
econ.
is weird.
Yeah, it's all over the place. But I'd say the
Yeah.
same about mine too. So yeah.
Yeah. The truth is life doesn't happen in a straight line. I'm just not gonna come on the call and lie about it.
Hmm.
Yeah.
Mm.
I'm sure your story is
Um.
interesting to Preston.
Yeah. That's so.
Yeah.
Yeah.
Something that I want that we usually ask people. Um.
Every
Could you
guest.
give a yeah almost every guest? Could you tell us, let's say, two stocks you like on the JSC and why?
Number one, Image Plus. Um
Apex.
I like
Say,
Image Plus. Let
bullish
me
on
start
healthcare.
Mm.
let me start with the management team because management drives outcomes, right? Because
Mm,
remember, a company is really a series, and if you don't have good project managers, you don't have a good company. So there's Keisha who was from JMB. She was at JMB for over 15 years, I think. She was a country manager there, so she knows about leadership, leading people, leading people through change, because
mm,
JMB would have changed significantly over the 15-year period. And also, she is very numbers oriented, very big on targets and sales, and looking at profit margins. So when she lends her expertise to a company that has medical specialization and medical experts, it's a very powerful combination because there's leadership and there's also business and there's also the medical side of it. So that's a unique combination. And that's why I think they have the edge over elite. The elite doesn't have that management mix. Second thing, spoke about population aging, and that feeds into diagnostics and imaging. And also, when we look at the just quality of earning, not quantity of earnings, but quality of earning. You know, quality of earnings is important, not just quantity of earnings. So
mm-hmm.
companies go bankrupt because of cash flow. They don't go bankrupt because of profit. First Republic was profitable, but it went under. Credit Suisse was saw many years of profit and it still went under. SVB was Silicon Valley Bank was profitable and it went under. These institutions were investment grade and they went under. So we have to pay attention to earnings quality. How sustainable is the company's cash flows? And we have to juxtapose that against profit. because what you can find is that, okay, earnings are guided by profits, but what you actually use to pay, sorry, dividends, I should have said, dividends are guided by profit, but you're actually paying out cash. So if you have a lot of profit year after year, but you don't have a lot of cash to match that, what you find is that your dividend capacity will be limited. So for example, well, I don't know if I should call him. Let me just say, there's a company on the JC that has consistently posted earnings increases,
I
but
know
they've had an
exactly
issue
which company that
with
is.
generating cash flow, and
Mm-hmm.
because of that, their dividend capacity has just tanked. So
Mm-hmm.
let's say their earnings, their payout ratio was like between 20 and 30%
Yeah.
since IPO, and then all of a sudden it's like 3% just out of nowhere. It's because they've been going through cash burn,
Mm.
and companies go bankrupt because of cash. So always remember that. The other stock I like is Fontana. Um, I'm very confident in Fontana because there is a theme of population aging. I think pharmaceutical products are um, they have strong demand in the Jamaican context. The Fontana brand is very strong, so there's a broad experience when persons go to Fontana. It's really an event. It's almost when they step into a Fontana, I feel like first world country, so to speak, right?
Yeah,
Um,
it's an experience.
yeah,
Yeah.
and it's very big on the wives go there and the
Mm-hmm.
daughters go there and the kids go there, and that's what
Mm-hmm.
drives sales.
I
As
saw
men, we're not
the
known
last
for
time I went to Fontana, I saw, well, the last time, yeah, one of the last times I went in, I saw Wayne Marshall and Tammy Chin, right, the
yeah,
Mitchells and so on, and it was a whole scene, and they're always there apparently because they know all the workers and thing. When my friends go to Fontana, they always say they're going with the thought process of going it's just to get one thing,
And then
and
they
always come
just
up with multiple things, always
that's the
overspend.
type of business they want. And they're not the
Exactly.
most expensive pharmacy. And
Hmm.
if you get sick, I mean, you are doctors, you can even tell me. If you get sick, more often than not, the type of medicine you want is there. Some
But one of the
pharmacies,
things I love about Fontana is it's one of the
yeah,
pharmacies where if I have a patient and I'm or so on, and I just need to write a prescription, you can WhatsApp the prescription in, and they will take that prescription and prepare the medication for the patient until the patient gets there. You can literally that's so easy. That's game
yeah,
changing,
yeah,
right?
that's
And
amazing.
there's a whole rant I could go on about the e prescriptions and so the laws need to change. Let's just say that
Yeah,
from now, right? I
yeah.
hope they do. I'm looking for it close to the end of this year, but yeah, like it's convenient. It's
Yeah,
convenient for a lot of doctors as well, so they will get a lot of business because I'm gonna send my patients if it's convenient. I'm gonna send my patients to Fontana just to pick it up because if they say, "Oh, I can go to Fontana," and I can just WhatsApp the prescription, boom, and that's good business for them.
yeah,
So
man. It's amazing. And what we need to remember is that their branches are almost always in high traffic areas, right? They're
hmm
and
usually
what
at
to
an
set it up.
intersection. Um, and when we look at the Barbican location, it's right at the foot of Jack's Hill, right around the corner from Cherry Gardens, not too far from Russell Heights. And a lot of these persons, they don't like to go far, right? They don't, oh my God, I don't want to go all the way to Waterloo. Oh my God, Brandon, why are you doing that? So then just go to the foot of the hill, pick up what they need to pick up, and just go right back up. And
yeah,
Montana understands that.
yeah, that's true.
Yeah, so
Hmm.
there are a lot of other factors, but yeah, those are the
Hmm.
two stocks I like, and their operating cash flows are just something to behold. When you look at cash,
Yeah,
Fontana is printing money, and those are the type of businesses I like because at the end of the day, one, bankruptcy is based on cash, so I like to invest in businesses that will see tomorrow or are likely to see tomorrow.
yeah, that's good.
And two, um, I like companies that borrow because they want to, not because they have to, and that has a lot to do with how you manage cash.
Okay.
Yeah,
Mm.
Hmm. When are they supposed to open the Portmore location again?
they said Q3 this year.
Yeah.
So that would be late
Because I
summer.
remember there was a delay. At one point, they were saying, I think it was summer, but then I
Hmm.
think there might have been another delay. I need to check back.
Yeah.
But
That's the
yeah,
I,
same
especially
plaza
I'm
on
as
their
batting for
price
Price
year
mark.
end
Mart.
though. I'm
Yeah,
I
batting
that's
think
for year end.
it's, mm,
Yeah, it's right beside the Price Mart in Portmore. But what we need to think about is the fact that, that specific area is on your way to Spanish Town. Because remember, Portmore is used as a corridor by a lot of people.
yeah.
So it's not just the Portmore residents. It's the Portmore residents plus the people who would be passing through Portmore to go to Spanish Town, passing through Portmore to go to Linstead,
Hmm.
etc. So that's the overall thesis in terms of foot traffic. Also, you're going to get spillover from the Price Mart crowd. And Price
Exactly.
Mart doesn't just take people from the parishes in. You have people who come as far as Mobile to go to Price Mart. So when you're looking at turnover and where it is, there's immense potential
Yeah.
for that location. It's not just,
careful in
oh, go
Julian.
Portmore people, yeah, man. Portmore people go there, man. No have two bridge, no go Portmore. Ah, that decent. No. You know, did you know that Portmore by itself has more residents than St. Thomas and Portland combined?
Wow. I mean,
Check
I
population
it
statistics.
oh, I mean, I
Portmore
can
by
see that
itself,
when you say it, but it still sounds
crazy,
that
right?
sounds crazy. Yeah.
And the wallet share is also bigger. Wallet share meaning the per capita income.
Mm-hmm.
So,
Mm,
this is about volume and value combined.
yeah. Wow.
Where you
Nice.
say, Preston, careful before
Yeah, I
make
was
people
saying
buy.
careful. Yeah,
Oh, pump.
you soon hear people say, "Yeah, man, Julian, I start pump stock now."
Yeah, yeah, yeah. But you see, the thing is, Preston, I'm not doing it. I'm not buying the stock so that I can sell it to the people who are on your show. Like,
Yeah.
like even if I don't do anything,
Mm-hmm.
what I just said is still likely
Hmm.
to hold, which is
Yeah.
different.
Yeah.
But if I was depending on your viewers to act on what I'm saying as my investment return or my investment opportunity, then that's a different case.
Truly, truly, truly.
Yeah.
Yeah, we just
Yep.
love the company, and I do like Fontana as well. I do like the thought of an APO still scares me. I'm not gonna lie.
Oh,
I'm,
your team anti-APO.
I'm just cautious knowing all the other APOs that have gone. Like the seeing what's happened after a lot of the previous APOs. I don't know
Yeah.
if it's somehow structured right, and so I don't
Mhm.
know how they can do it, but if it is somehow structured right and so on, I'm buying.
But they
If I
they
can
actually
see,
came out saying they're interested in an equity raise.
this was years. This was a couple of years ago. Fontana wanted to do an APO. I'm pretty sure.
I didn't know. I never heard of that. I won't say there wasn't, but I just never heard of it. What I said though is I don't want to go down the APO thing because it
Yeah,
kind
that's
of
fine.
just
We
be,
don't have to.
yeah.
I
What
wasn't
it did that
planning
for
to.
another episode.
I was just saying that that's the only fear I had, and I think I'm not sure if it was an article. I'm not sure if it was speculation. Now that I think about it, with me and
Mhm.
a bridge, it's sometimes it's difficult to remember
Yeah.
where those
I don't
thoughts
think
come
they would
from.
do. I don't think they would do one
Mm,
because remember what I was saying about cash.
yeah,
They,
they
they,
only
they have
borrow
a
when they need
lot
to.
of cash. They have more
Yeah.
cash than they do debt. So if they
Mm,
wanted to wipe out all their debt, they could. So they're borrowing because they want to.
yeah.
And normally you do an APO because you want to increase cash to fund a project and they don't need
Hmm.
to. They can fund most of their projects internally. But
Yeah,
I'll
and I
just say
mean, if they
one
borrowed
thing.
more money to do it, that would be great because equity is way more expensive. So,
Yeah, yeah, because you're
I,
getting diluted.
yeah, I don't necessarily see them doing it. It was just something in the back of my mind. But yeah.
Yeah. What I'd say about APOs, it's tricky because most of the APOs that would have happened coincided with the market softening, right? So when JMMB did their APO, it was towards the end of 2019. And if we were to mark where the market has been between where APO did their first, where JMMB did their first APO, sorry, to now, markets have fallen off quite a bit. So what we have is a case where companies have created more supply when general market has fallen. So it's only natural that because of there only natural that because there is a mismatch, you would say downward pressure on the prices post listing. So I don't think those things have happened, i.e., the fall off in the prices happened because there's an APO. I think it's a matter of overlap. You have all the supply coming in while demand dropping out, and that demand would have been dropping out even if there was no APO, right? Because the prices have fallen, and many stocks have fallen since 2019. That didn't do APOs either. There are companies with prices that are languishing because of the conditions we're in. When we're talking about interest rates, when we're talking about overall institutional investors rotating more into fixed income, all of these things, the prices have languished and they're struggling now just from a price action standpoint. And we want the gains, but we're just not seeing the gains when they expect them. Not necessarily because of one APO, because of these external factors. So let us have my take is we should continue the APO debate when we're back in a bull market. That day will come again, and then we will have like a more rounded conversation to say, okay, during the bear cycle or a bearish cycle, because remember, a bear market is when security prices fall by 20% or more. We can have a bearish cycle or bearish conditions where prices don't rally the way they normally would. You're seeing security prices mark lower. You're seeing where prices are not as reactive or investors are not as reactive to earnings outperformance. That's what we mean by bearish conditions. So we've been talking about APOs in a bearish window. Let us wait until the bearish window ends so we can have a balanced conversation about APOs. How have post APO stocks traded in a bearish cycle and how have they traded in a bullish cycle? So we can see night and day instead of just saying, boy, look on the thing, APO hot man, it drop off, so APO bad. That's a Mickey Mouse argument, with all due respect, because it's one cycle you're talking about. You see what I'm saying? So
Noted.
let's just
Yeah.
wait and then like we pick it up. That's my take. But we can do this on another episode where we talk about some other stuff. That's
Yeah.
if you even take what Doctor do.
No, bro, you're always welcome. Trust me, Julian.
Man, respect
Always,
that.
always welcome here.
Yeah.
Okay, so fanta those are good picks. I like those picks.
Yeah, man,
Is
respect.
there anything you're looking forward to in the market for the rest of the year?
Um boy, I don't know if you guys saw it, but I did an interview where I spoke about the equity market performance and I was one of the people to say I expected this year to be tough. I
Mm-hmm.
just going to share the article with you.
Sure.
Um, what I'm saying is that I am really looking to see how companies incorporate their business models in such a way that they can outlast a slowdown, economic slowdown. How can they outlast this inflation cycle? I am one of the first persons to talk about inflation on Twitter as a real threat. If you can check it from like 2021, I was like, yo, inflation is coming. And people were laughing at me. But the point is, inflation has sticky and structural and stubborn drivers, right? So when it's not business as usual, so even though we're seeing inflation come down, it's still hovering at a level that's higher than we expected for an extended period of time. Because it's not just about whether or not inflation is trending down, it is how long inflation stays at a certain level. That's really the crux of the conversation. It's not whether or not inflation is coming up or coming down. It is where inflation stays and how long it stays there. So I'm not a medical professional, but let's talk about temperatures, right? You can have a really bad fever, and the fever lasts like 10 minutes, and it's coming from a high and then it normalizes in 10 minutes. That's not a cause for concern. But if your fever comes down by like 1 or 2 degrees Celsius, but it stays above where it's supposed to be for like the entire day, then you need to see a doctor because something is happening to you. Your system can't take that high temperature for an extended period because your cell them are gonna start mash up, no so. You see me?
Sure.
So it's
Yeah.
about how high, how long
Yeah.
prices stay
Yeah.
high,
Yeah.
because
Yeah.
what that will do, it will make persons risk averse. So people don't feel as confident planning for the future if
Hmm.
prices are too high for too long. What it does is that it drives up interest rates, and interest rates will stay higher for a longer period. So the cost of financing things is much higher, like home ownership or financing equipment. Anything
Hmm.
that can be purchased with debt will be more expensive. And what you'll find is that investment opportunities or the opportunity set will shrink because the higher your what we call a hurdle rate, the higher your hurdle rate is, meaning if I can get 8% without taking any risk, it means that whatever I invest in has to be more than 8% for me to even look at it.
Yeah.
Now, if you move that hurdle rate to 12%, then all the things on the investment menu shrink because there are less things that can surpass 12% and things that can surpass 8%. So if you find that the investment menu is getting shorter or smaller,
Hmm.
it means that capital will flow to less projects and it will cause the economy to slow down. So those are all the issues with prices staying too high for too long. That's what we don't want. So we don't want to get distracted about, oh, inflation was down 1% compared to the previous month. That's
Yeah.
child's play. We need to look at how long inflation has stayed above a certain period, why it is staying at a certain level for a certain period of time, and also what are the areas that are being impacted. Because healthcare inflation and food inflation is different from energy inflation. They're not
Yeah.
the same thing.
Hmm. That's
So
true.
inflation can be coming down as a basket, but in terms of the basket, when we unpack it in terms of sectors, there are sectors that are still way above where it normally would be. You still have food at restaurants up like 27% year over year, even though the basket is coming down, but no conversation is being had about that.
Mm.
That's always one of the
Sometimes you have,
limitations of the CPI, which is what they usually use for inflation. Because if you are if you take, for example, a more personalized inflation, if you're someone who your
yeah,
expenses are paying for gas in your car, going to the supermarket, things like that, your inflation, the inflation that you experience, isn't going to be what the CPI says. The CPI might say 5%, but what if gas went up this much, groceries went up this much? So there's more like a personalized inflation that a lot of times is a lot higher than the CPI. So that's one of the really big limitations with it.
also to Preston, inflation can compound. So if we have 10% inflation in one period, and then in the following corresponding period, we have 5% inflation, we're rejoicing. But remember that 5% is an increase on top of the previous 10.
There's not 15%.
Yeah. It's not
And that's what
15.
we feel as Jamaicans. That's what
Mm.
we live in.
Yeah.
So that is why $100 can't buy nothing. They might as well make $100 coin now. Because essentially what we've lived through is compounded inflation because it's growth on top of growth, not just in terms of investments, but also in terms of inflation too. So it's not just, that's why I said what's more important is how long prices stay above a certain level, not just whether or not inflation is coming down.
Hmm.
Because if you have, again, if you have inflation of 10% in one period and it is followed by inflation of 5%, it is 5% increase on top of that bigger base, which is still an issue. Because 5% of a big number is still a big number. You follow? So the fact that it was a big number previously is
Yeah.
still going to carry forward in the future. 2019 prices are not coming back, and that was the point of my thread. So because there isn't as much price stability, we can't invest the same way. We have to look at opportunities that can withstand inflation. That's a part of why I'm a healthcare bull. That's a part of why I'm looking at real estate. That's a part of why I'm bullish on food and commodity linked investments. Um, yeah. Also, too, let me give you another gem. Do you realize that a lot of the fertile land is being used for housing? So that means that on a square footage basis, the yield on the land in terms of the return on capital, because farmland is getting scarcer and scarcer, the potential return from farmland-based investments is higher because a source of return is capital scarcity, and land is a factor of production. And land is a part of a capital base. So if you find
Hmm.
that farmland is getting scarcer, it means that the potential return on farmland, i.e., food production and food products, will carry a premium. So you have all these people living on top of fertile land,
That's like
using it for other
that's like
purposes.
Bernard Lodge and those places.
Yeah, but they
Mm.
all need food. So
Yeah.
what does that do? That will increase food imports
Mm.
potentially, right?
Potentially.
We're just talking about potentially.
Yeah.
And if we're all importing more food to a greater extent than we are producing it, right? Meaning negative import substitution. What that will do is devalue the potentially not devalue. Sorry, I almost got attacked for this. It will cause the J dollar to depreciate further, um, or increase the likelihood of it being depreciated further, and increase the price of food. But guess what? If you're a local food producer, you can be more competitive. You know, it's a boy, why pay for the $50 honey? I have it for 30.
Yeah.
Um, but if that land was abundant, you couldn't charge 30, you'd have to charge 15. So
Exactly. So it's
yeah, 15
balance.
per liter. So yeah, again, I'm just giving you guys opportunities. It's not just all about Woodstock is hot. Like
Yeah.
we have to look at themes and how can we go into the different themes through different entry points. So equity, publicly listed equity is an entry point. Let me give you a play. What if you bought a um a dental practice, and you packaged a series of dental practices as an investment portfolio, i.e., all those dental practices, let's assume that they're cash flow positive, right?
Mm-hmm.
And as a group, you can allow people to invest in that portfolio of dental practices through the cash flows that they generate, even if it's not from the equity or the profit that they generate, right? So you're not taking the equity risk. What if you're just a landlord and they're all paying your rent? That's still cash flow, and you can
Yeah.
pay that out as a dividend.
Mm-hmm.
That's another way of getting healthcare exposure, you know.
Yeah.
So
True.
as investment strategists, this is what we do. We try to find different entry points into the same theme. So you can have a farm, or you can have a portfolio of farmland that generates income. You can lease farmland. You can buy the farmland and lease it. So you don't want to farm, you don't want to take on the volatility of the commodity itself and commodity prices. You don't have the appetite for that. So you buy the farmland and lease it to the farmer and get lease income. That's a differentiated return than buying a house and trying to rent it out. Because
Yeah.
the return factors are different.
Mm-hmm.
You
That's
follow?
true. Yeah.
So that's what we do. So these are the different plays that we look at.
Mm. Julian dropping gems. Loving it. Loving
Yeah,
it.
remember I'm Dr. Doom. And also, remember that I'm Dunce. Remember that I'm Bad Mind. Remember that I'm not in top 10. Remember Seminar know nothing. Remember all these things. These things apply to Dr. Doom.
Dr. Do. Boy, big up yourself, Julian. Thank you for coming on the podcast. Thank you for coming on the
Yo, thank
show.
you for having me. It was a blast. I had so much fun.
Yeah, man, this was actually really good. We definitely, guys, this isn't the last time you're gonna see Doctor Doom on the Limitless podcast. Just look out for more amazing content. Thank you guys so much. Like and subscribe. Subscribe if you guys love this video. And yeah, let us know what more you want to hear. Talk to us in the comments.
Yeah, man.
Limitless.
Salute. Thank you.
Yeah, man, Limitless out.